Good morning, everyone. Trust you're well and keeping safe in these difficult and uncertain times. I want to thank you for choosing to attend this morning's session. This session is one of many sessions organized by PwC Nigeria to discuss the impact of COVID-19 on the financial services industry. This session is focused on the impact of COVID-19 on operational efficiency and supply chain management for players in the FS industry. My name is Abiodun Falade and I will be moderating this session. Please note, this webinar is being recorded and you will have access to the recording and slides via our website later on. We hope to have a very smooth session today. And in terms of not having any network issues, but in any instance of any network glitch, I would like to plead for your patience. I'd like to bring to your attention the ground rules for this session. The first is that all attendees have been automatically placed on mute, and I'm sure you'd have noticed that as soon as you join the session. And this would remain so for the duration of the webinar. This means you won't be able to unmute yourself. And this is just to help us manage the presentations and minimize disruptions as much as possible. However, if you have any comment or questions, you can type that at any point during the session. You just need to refer to the Q&A box at the bottom right corner of your screen. That's beneath the chat box, so you can type in your comment or your questions there. For comments or questions related to technical issues, those will be addressed real time via the chat section, while questions related to the presentation by our subject matter experts will be addressed during the Q&A session later on. This session is going to run for not more than 90 minutes, and we will start with opening remarks from our chief economist, followed by subject matter expert presentation on COVID-19's impact on operational efficiency and supply chain management. Afterwards, we will take questions, whatever questions we have that has been directed to the subject matter expert based on their presentation. And then we'll conclude with results of the survey you completed while registering for this webinar. So at this point, I will hand over to Andrew Nevin for the opening remark. Andrew is a West Africa financial services leader across assurance, tax and advisory. He has advised numerous African banks, insurance companies, and capital market players across strategy, technology, operational and regulatory issues. As chief economist, Andrew leads one of Nigeria's best economics teams and is one of the preeminent voices speaking about the Nigerian economy. Over to you, Andrew.
Thank you. Good morning. And thank you to all of you for sharing your time with us this morning. I'm going to make a few remarks in the context of my role as chief economist. And let me start by saying I think that economists around the world were very slow to recognize the economic impact of COVID-19. As late as February or even into March, we had prominent economists saying that we might see global growth go from 3% to 2%, or 3% to 1%. But the truth is, I think we all recognize now that this is the gravest economic challenge that we'll ever have in our lifetime. What happens with the lockdowns, of course, is that we realize that one person's spending is another person's income. And when people are at home and they're not spending, other people lose their income. So we've seen extraordinary numbers from around the world. 17 million people have lost their job in the United States in the last 3 weeks. The UK, United Kingdom, is projecting GDP contraction growth of 35% in the second quarter if the lockdowns continue. Australia has just announced it expects GDP to reduce by 10% in the first half of 2020. And in Africa, we're not immune from this. Again, I think economists were slow to pick up on the impact on Africa. The projected growth of GDP in Africa was about 3% for this year overall. Now the World Bank's come out and said it will shrink at least 3%, which is massive when you consider the population growth. And in Nigeria, we haven't made a projection because there's no model for what's happening. But we've come out and said because we're exposed to oil, and of course there was the extraordinary event yesterday where oil in the United States went less than zero, which is just unthinkable economically, basically because oil demand has collapsed by about 25 to 30 million barrels a day in this period. But in the Nigerian context, we're suffering not only from the general economic slowdown because of COVID-19, but of course because of the oil price. And I'm sure you've seen that the price for Nigerian oil is in the teens, which is less than the cost of production. So all of this adds up to being just, as I said, the greatest challenge for the economy, the greatest challenge for financial services companies in our lifetime. And that's why we put on these series of seminars, on webinars. Today, in particular, we're focusing on operations, operational costs, and these are critical issues for all of our clients going forward. So, again, thank you so much for giving us your time this morning. We've got a fantastic lineup of experts to talk about these issues, and let's have a great session. Thank you. Back to you, Abiodun.
Many thanks, Andrew. Thank you for setting the tone for subsequent presentations and discussion. At this point, I would like to hand over to Adedoyin Amoso to take us through the impact of COVID-19 on operational efficiency for financial services players. Doyin has over 20 years of professional experience in the provision of assurance, taxation, advisory, and consulting services to major players in the financial services sector. She has led major organizational change projects focused on process reengineering, cost optimization, procurement transformation, digital strategy development, and finance function transformation. Adedoyin is a fellow of the Institute of Chartered Accountants of Nigeria, a member of the Chartered Institute of Taxation of Nigeria, an ISO 9001-2015 certified auditor, and a certified process practitioner. Doyin, please, over to you.
Thank you, Abiodun. Good morning, all. I will be presenting our perspective in terms of typical challenges we are facing as a result of the COVID-19 pandemic. I will also discuss what your peers in other territories are doing in response to the situation in which they found themselves. And of course, I'll talk about key considerations for you going forward. So in terms of the typical challenges you're facing now, a very practical one now is the fact that there are a number of ATM cards that have expired or will expire before the end of April. That is one practical challenge you face now. How would you get those cards across to your customers? Without access to their ATM cards, a number of your customers cannot make withdrawals. A number of them can also not transact across the POS channel. Some FS players may say, well, they have access to other means of accessing their funds. But the thing now is, this is a jolt out of the blues, and your customers are not prepared for it, and they really don't know what to do. So the thing now is, are you preparing them for what needs your own workarounds, your own solutions, if any, to this present challenge? So for instance, do you have a sufficient number of biometric ATMs that will allow them to withdraw cash from ATMs? Whether we like it or not, Nigeria is still a cash-based economy, so you still need cash for things like groceries, perishables, and all. So you still need access to cash. Do you also have other means by which they can have access to their funds? And have you communicated this to your clients? Another very present challenge is cash deposit. You probably will say, well, Lagos, Ogun, and the FCT are on lockdown. But the thing now is essential services are still being provided. So your pharmacies, your eateries are still at work. Your shops, supermarkets that sell foodstuffs are still at work. Markets open from time to time. And of course, there are cash transactions taking place in all these places. How do you want your customers to safeguard the cash they now have at their disposal? Because a lot of them will have a lot more cash than they normally would under normal circumstances. So do you have a means for them to be able to pay in the cash, even if it is subject to count? Another issue a number of your clients are facing is the negotiation or renewal of credit lines. And I'm not talking about the credit lines for individuals. I'm talking about the credit lines for medium and large corporates. I know some banks have reached out to their clients that you can renew based on the current terms. But the thing now is your clients need to be aware of what will happen in this case, or what they should expect, so that they don't find themselves in a situation of panic. Another key challenge that you probably face as a financial services player is the impact of transactions in transit. We know clearing is not operational for now, so checks can't be cleared. And in instances where these checks are the basis for the payment of loans, what happens? So a client has a loan with you, the client has paid in some checks, so what do? It's not the client's fault that the check can't clear. And really, you also say, well, it's not your fault that clearing isn't taking place. But the thing now is there has to be a middle ground that serves the purpose for you and for your clients. Then providing services to the vulnerable, for instance, the elderly, and those that generally avoid digital channels for various reasons. Some of the elderly, going to the banking hall is the highlight of their day. For them, it's therapeutic. For them, it's the way they connect. This has stopped. But the thing now is they still need access to their funds, even if they can't have access to the nice interactions you have with them. But the thing now is they still need access to their funds, and they still need access to be able to transact business. So what workarounds have you put in place for these customers, i.e. the elderly and those that, for instance, don't have cards and don't use the USSD codes? And this is not all about banking alone. We also know that insurance companies are impacted. The no premium, no cover policy is still very much in place. So what happens when insurance policies fall due and they need to be renewed? It's even more precarious when the renewal is a condition precedent to, for instance, a loan transaction. So maybe the bank requires that the customer has valid insurance on the collateral, for instance, a building. How do you handle micro-insurance for people that pay for insurance on a weekly or on a monthly basis? We've seen a number of buildings go up in flames over the last 2-3 weeks. What measures are being put in place to safeguard the insurer and to safeguard the insured? We've heard about skirmishes and breakdown of law and order. What really are we doing to safeguard the assets of our clients and, of course, safeguard our own position as insurers? Next, I'll talk about the insured. What kind of support are you providing to the insured, especially in those areas that are really impacted in this pandemic? So health insurance is impacted, life insurance is impacted, and travel insurance is also impacted. Fire and burglary to some extent, and of course the motor vehicle. Motor vehicle, well, for the vehicles that go around for essential duties. But the thing now is for health insurance, life insurance, travel insurance. What forbearance, if any, are you giving to the insured? And in what way are you communicating this to the insured such that they know what to expect and they know that you have their back? Because this is when it is really important for them to know that insurance is all about protecting them when they are in need. So you need to have a framework in place to come through at the most important time for your customers. There are other points that cut across financial services industry, regardless of whether you're a bank, you're an insurance company, and you're an asset management company. For instance, there's been some communication from financial services players. But the thing now is, are we communicating with impact and with empathy? People have lost their means of livelihood. People really don't have access to funds. They're depleting their savings. How are we communicating with them in such a way that they feel that you understand their pain and you're there for them? I must say at this time, this is not the time to send random generic mails. You typically will find that a lot of your customers are at home now, so they have more time to read your messages and interpret your messages. And I dare say misinterpret your messages. So your messages have to be clear, they have to be direct, and they have to be deliberate so that when I read it, I know you know me as your customer. Another issue you probably will be facing now will be balancing the risks and controls in what is now the new normal. As a result of the disruption to banking operations, really banking operations have stopped, as in terms of banking operations in the banking halls, you've had to move a number of the transactions, either transactions in the banking halls or even transactions in your branches, regardless of whether or not you're a bank. You've had to move it to either your customer experience centers or your processing centers. So you've had to move a lot more processes to these centers at a within a short period of time. You probably haven't had sufficient time to evaluate the risk. But the thing now is, doing nothing is not an option at this time. It's important that you understand the risk you're taking and balance it with the control. So we don't want a situation where the cost of control is higher than the risk we're seeking to address. We need to have a look at each and every one of the changes we're making in such a way that there's a focus on efficiency, there's a focus on the customer experience, and of course, ensuring that you have appropriate controls in place. Another challenge you probably are facing now is managing service levels. And in this case, you'll find that you've had to ramp up activity at your central processing centers. And with this, you probably may have had degradation in terms of service levels. So for instance, timelines, there are longer waiting times. And of course, this may lead to greater frustration on the part of your customer. But the thing now is, how have you moved around resources in such a way that you minimize this as much as possible? So the thing now is, you need to understand the throughput. You need to understand the rate of increase of these transactions. You need to predict and project. So you probably will have more people calling your contact centers to address issues in relation to POS or ATM issues. You have people calling with respect to transactions that were not consummated for which they're charged. So you have a lot more people calling your contact center and expecting you to do a lot more than you used to. So it's important that, one, you manage the expectations of your customers. For me, I liken it to being at the traffic light. Once you see the countdown, it makes the wait more bearable. So once you've defined the expectations and you've communicated these expectations very clearly to your customers, they know what to expect. It's not enough for them to call and just have to wait endlessly. Next, I'll talk about managing third-party support. A number of the processes in these customer experience centers and processing centers have been outsourced to third parties. We need to have a clear understanding of their business continuity plans and be sure that it will come through for us when we have a situation like this. So we have to be in constant interaction and discussions with them so we understand their stance in terms of, okay, so what will we do in this instance and how do we make sure there is no degradation in service levels. I'll now go on to talk about what your contemporaries are doing in other territories. And in this case, I'll cover initiatives being embarked upon by financial services players in the UK, the US, Hong Kong, Singapore, EU, Australia, and the like. So the first thing a number of them have done is to modify the queuing arrangement in their branches such that they're able to meet the minimum requirements in terms of social distancing and infection prevention. So for some of them, they have closed alternate counters so that people are standing in such a way that they do not pose a risk to other customers. A number of them are also leveraging automation, intelligent automation, for them to be able to deliver on the large number of loans they need to modify and large number of loans they need to disburse as a result of government interventions. So it's never happened, at least in recent times, that they would have had to modify so many loans within a short period of time, and they probably wouldn't have had the need for them to book so many, maybe government-funded or donor-funded loans within a short period of time. So a number of your contemporaries are deploying intelligent automation to be able to ramp up capacity within a short period of time. They're also using intelligent automation for them to be able to process the moratorium they're granting to mortgagors and credit card holders. They've also waived ATM charges. So all these not on us and not on us charges. Okay, so after withdrawing 3 times, you get charged. All these charges have been waived. Overdraft charges in terms of the fees have also been waived. Then early deposit withdrawal, which we call pre-liquidation locally. These charges have also been waived because you find that a number of your customers have had, they found the need to break their deposits just to meet the minimum requirements for them to just forge ahead. So a lot of these charges have been waived. Next, they also have a situation where they can be served legal papers electronically. This is all in a bid for them to protect their staff. They've also adopted digital signatures. So, for instance, you have agreements that need to be signed. The pandemic or the lockdown is not a showstopper for them. So you have situations in which clients can digitally sign agreements, which both maybe the relationship officer and the client, as while the relationship officer and the client are seeing this, and the legal documents get signed digitally. You also have situations in which insurers have doubled the benefits for frontline, i.e. the medical staff, who are now hospitalized as a result of COVID-19. Insurers also have also provided access to what they call medically advised testing, in which they use a checklist and an algorithm to determine whether or not you need to be tested. There's also a waiver of co-pays and a removal of deductibles for the insured, all in a bid to show their customers, well, they're in it together, you have the fine print, but we know this is an unusual situation and we have your back. I think this can be likened to what happened in Japan during the tsunami, when prior to this time, the relationship between the insured and the insurance companies was one that was far from ideal. There was quite a lot of distrust between both parties. But because the insurers came through during the tsunami and they waived a lot of the fine print, as in those things in the fine print that customers believe that insurance companies are quick to throw at you, there was like a revival in such a way that the rate of which customers now subscribe to insurance services grew in leaps and bounds. So that issue of trust was addressed as a result of how insurers managed the situation. You also have insurers providing technological expertise in terms of the development of smart imaging to help in speedy diagnosis of suspected cases. And across all financial services players, we found clear communication, at least the ones we evaluated. We found clear communication on changing waiting times, the new service levels, the workarounds, and really basically preparing you for what to expect as the situation evolves. I'll now go on to talk about what you should do going forward to make sure that you have smooth operations and you continue to delight your customers. I'll start by talking about what you can do to protect your stakeholders and better plan your workforce. So, of course, it is important that we implement the social distancing guidelines wherever we have customer touchpoints. So, if there's a way we can communicate the need and promote social distancing anywhere we have our customer touchpoints, this will be ideal, well, to protect our customers and to protect our staff. It's also important that you provide information to the teams on ground on a real-time basis, so they understand changes you're making to processes, and they can discuss the impact, give feedback that will enable you to make changes on the go. One thing that is also important is as you go on and you find that some workflows are working, it's important that you celebrate success so that the morale of the team is high. I'll also talk about ensuring that you know the capabilities. More than any time, you need to know the capabilities of your staff. So you know the skills, the broad range of skills they have, so you know other places where they can be deployed to. You need to know their nationality, their ethnic group and all that, and their location, just to ensure that you are able to move resources around at this time. So you need to be sure that you've done proper workforce profiling so that work levels can be distributed in such a way that service levels are not negatively impacted. I'll now talk about data. We say data is the new oil. More than any time, this is when you need to be able to take deliberate decisions based on facts and information that you have at your disposal. This pandemic will affect different sectors of the economy in different ways. It will also affect clients in different ways. So really, one size doesn't fit all. So it's important that you leverage data to model the impact on each customer, on the sector, based on customer-specific data. It is on the basis of this you can develop customized solutions to the needs of each of your customer groups, including the vulnerable and those that well, for whatever reason, avoid your digital channels. Now, it's also important that you're able to maintain operational agility at these times. And of course, by now you should have decided the processes to be moved to the processing centers. But this is a process that is alive, as in it keeps changing. So you need to know that it's not something you do and you rest on your oars. You just need to constantly review how things can be moved to the processing centers and your customer delight centers. We need to be sure that we're managing service levels to minimize customer frustration and waiting times. So we need to make sure we deploy resources accordingly. We need to make sure that the walkthroughs are not onerous on your staff and on the customer. We need to be sure that the capabilities of our digital channels are improved in such a way that we're still able to meet their at least minimum requirements. So I talked about biometric withdrawals before. If this capability exists in your ATMs, it is time for you to make sure it is activated. It's also important that you consider collecting cash, especially for the small customers, the small and medium-sized customers that are providing services now. So is it possible for them to deposit cash on a subject-to-count basis using your ATMs? We also need to consider contactless payments and enhancing. Now, there are ways we can ensure, for instance, that our ATMs can print the ATM cards for those that their cards have expired. There will be changes to loan agreements. So are you able to ramp up capacity such that you are able to make these changes quickly and in such a way that you're able to communicate with your customers? We should also explore video conferencing options for your relationship managers and your contact center agents. I talked about balancing risk with control. So you need to know what is the cost of the control and what risk are you seeking to address. We also need to bear in mind that doing nothing is not an option. I'll round up by talking about communication. I talked about this before, but this is not something we should take for granted. We need to be sure that we're leveraging data, so we're sending the right messages to our clients, showing empathy, communicating the changes we're making, and of course providing training to them on the use of our digital channels. At this point, I'll hand over to Biodun, who will introduce the next speaker. Thank you very much.
Many thanks, Doyin, for the wonderful presentation and for your insight on how financial services companies can sustain operational efficiency and also remain agile even during and post-COVID-19. I just want to remind us as attendees that we can type in our questions in the Q&A box, because as it is now, that's the only option for you to either make comment or ask questions, and those questions will be taken during the Q&A session and be referred to the relevant subject matter expert. Our next subject matter expert is the Senior Manager in PwC's Operation Advisory Competency. She supports clients with achieving their operational and cost efficiency targets and has worked with several clients in the financial services industry across African markets. Her technical experience spans business transformation, cost optimization, business process and policies review and design, procurement transformation, and project management. She is no other than Olabunmi Lawal. Over to you, Doni.
Thank you, Biodun, for the introduction. Good morning, everyone, and once again, welcome to the potential impact of transitions in Nigeria. I think there's a need for efforts to focus on cost containment initiatives, which will ultimately impact the bottom line positively. So in our session today, we'll be looking at the key concerns for financial institutions when it comes to managing them and optimizing their supply chain. We'll also look at similar interventions implemented by financial institutions globally. And lastly, we'll look at key considerations for Nigeria's financial services industry when setting up their response strategies. So we'll start with looking at the risks and challenges that financial institutions are facing today, considering the impact of COVID-19 on operations. So what we've done is to review global concerns when it comes to financial institutions, and we've seen that the key focus areas when it comes to risk and challenges focus on things that are proactive and efficient and stakeholder management. So, for example, I think a key concern we've noticed is how do organizations ensure that they're able to balance budgeted spend with operating revenue. Forecasted oil revenue economy, COVID-19 has done the economy. And we think most financial institutions have to be it will also be important for us to look at this in terms of how do this balance with our assets. Similarly, when we look at in-flight projects where that have commenced or that have commenced before the spread of COVID-19 worldwide, we'll look at the in-flight projects, especially for those that have contracting and cost, where contracting has commenced or where significant cost commitments have been made. There are key concerns on how to ensure that these projects remain on track, especially when you take into the consideration the effect of the global supply chain shutdown. So there are concerns of receiving whatever products or services or even goods that banks or financial institutions have committed to. Also, the impact of shifting FX rates for some institutions globally is a key concern, especially when you deal with vendors in other parts of the world. Another concern when you're looking at existing contracts is something about ensuring that you can still derive optimal value from these contracts that have been signed. While also critical to this is ensuring that organizations are able to seek alternative sourcing strategies, especially when you have suppliers in territories that have been severely impacted by this lockdown and the pandemic. Lastly, though you have mentioned a lot of communication to the publications, financial teams. What we've also seen is the requirement to communicate constantly with your key suppliers. How do you ensure that correct and what kind of communication need to be set up, established, and established to the right partners? Next, we are going to look at the global responses to the COVID-19 pandemic. So, what we've also done again is to, based on leveraging interest from the PwC, we looked at what financial institutions have been implementing to again address challenges that have been identified from the pandemic. So, what we've seen is that they've adopted various responses, including, for example, to support with operational efficiency initiatives. So first of all, with dedicated cost management streams. As part of the implementation of their business continuity plans, financial institutions have set up forums again to implement their plans, and then other challenges that come on as time progresses. But what we see specifically is that some of them have actually established a dedicated cost management workstream which is focused on procurement and supply chain risks, how these risks are mitigated, and then obviously how these risks are coordinated in line with that of the larger organizations. We also see that for some organizations where this has not been done before, we've seen them centralize information strategic contract. So what they've done is that they've enabled them to implement a single view of spend across the organization. What we've also seen, again, is a common response is that, again, when it comes to managing the workforce, if institutions are putting a hold on non-essential recruitment and promotions, salary increases, overtime spend. This is very common and has been implemented not only by financial institutions, but by organizations all over the world, irrespective of the industry they are in. When it comes to operations for financial services, one thing we've also seen is that because of the isolation and lockdown procedures, a lot of them are shutting down branches and locations temporarily. This also affects maintaining the larger branches, the larger flagship branches that can again accommodate most of the typical banking transactions, and then they are closing the smaller branches or outlets within the same vicinity. So what this has enabled them to do is to concentrate operations to maintain operations within specific areas while also following isolation and social distancing guidelines. And one last thing we've seen is that where in addition to again financial contributions made by industries, what social impact we've seen is that institutions are temporarily donating their spaces for public good. So, for example, we see banks in Italy or in China, they've donated their closed or unused branches and locations. They've used these places to coordinate food banks. They've used these spaces to coordinate the temporary holding of protective instruments and equipment. And one thing that is to say, financial institutions are stepping up to the plate. So it's not only in terms of financial contributions that are being made, they are also, again, ensuring that their social impact and social growth contribution is felt globally. So next, we'll look at the key considerations going forward when we focus on cost efficiency. So what we'll do is, taking all the points we've discussed, it's key to look at the key points financial institutions have to consider when setting up their COVID-19 response strategy. And what we've done is to look at this around two key areas of cost optimization and supply chain optimization. So quickly, for the first area for cost optimization, the key suggestion here is to find ways to reduce costs quickly. But this will not only focus on just embarking on the traditional cost-cutting or cost reduction exercise. There is a need to ensure that whatever actions or initiatives that are being implemented align to your organization's liquidity management strategy. Again, because we've recommended an establishment of a cost management sub-work stream, this will be done in taking into consideration the large organization's larger response, crisis response strategy. So first of all, we suggest a review of the annual budget and plans. So this will typically include your infra project items, RPs, and proposals that you have distributed after that. This is and this spend needs to be classified and prioritized in light of the possible statement of revenue forecast for 2020. It's key now to identify what can be stopped, what can be slowed down, and if possible, what spend and directed to initiatives with immediate impact. So, for example, Dori has mentioned for banks the increased cost sectors for insurance, providers, increase requests to digital processes. Because either way, we need to be able to ensure that we address this request with as minimal human intervention as possible. That classification, that we need to classify and we need to classify them into must have, good to have, and nice to have. So your must have being your critical expenses aligned to your most important strategic priorities. So your must have are basically those expenses that keep your that you need to keep like home. The nice to have will be beneficial, but then on operation. Done now, and they are across the organization, especially this is a good time to review your purchase specifically. So this will enable you to keep a tighter rein on spend across the organization. So one other thing that also comes to mind is, especially if you're going to be changing your purchase to pay and approval processes, you need to ensure that these changes are clearly communicated, the bottlenecks are minimized, and appropriate controls are in place and communicated. So this will help us address any risk that may arise from these changes. Another point will be very useful will be developing and implementing guidance to support the accurate tracking of cost savings initiatives. So, as we always say, what is not tracked, what is not monitored might as well not be implemented. It is key that we leverage whatever technology or processes that are existing within the organization to support the efficient tracking. It's also key to assign responsibility for those individuals that will be responsible that will monitor whatever cost-saving initiatives are being implemented, and then these individuals can report on what's been achieved to the key executives within the organization. Finally, for cost optimization, it is important to institutionalize a cost consciousness culture within the organization that outlives the pandemic. I think what we're trying to say here, leveraging learnings from the previous economic recession and other global issues that other financial institutions have had to suffer with globally. It is important to solve these issues now and implement initiatives now with an eye on the future. So it's important that whatever investments we are making, whatever spend we are making, we are investing now can carry over into the future. So, for example, if organizations invest in remote working capabilities, what we suggested is whatever remote working capabilities or work from home capabilities that is being invested in shouldn't just be a temporary fix. It should be something that should be able to be transferred into the future and, to support whatever workforce transformation institutions have planned. Looking at supply chain optimization, people notice the same supply chain is less significant in the FS industry compared to other industries. But because financial institutions depend on a wide range of third-party vendors, including hard processing vendors, IT vendors, and other, outsourced support services vendors, what we've seen is that the operations of financial services institutions could be impacted as this crisis wears on. So it is very important for financial services institutions to begin to look at ways that they can protect and optimize their supply chain during this period. So this is a good time to start viewing existing contracts so there's flexibility that can be leveraged. Also, we've seen that this is a good time to start renegotiating for contracts that have already been signed. It's a good time to start again reviewing and negotiating contracts to see where you can optimize spend, whatever other optimization opportunities, and where you can extract more values from this contract. So, for example, where there are planned price increases, to the extent possible, how can we delay or postpone these planned price increases, and where we can postpone or delay them, are there alternatives that we can leverage within the industry? Also, it's a good time to start reviewing your contract terms and service level agreements with key suppliers in light of whatever changes this pandemic will bring upon your requirements. So we've seen that during this lockdown period, branches or offices, majority of the branches or offices are closed. So for facility managers that are responsible for your cleaning, how are you adjusting these contract terms with them? So post the lockdown period, which branches will remain open, which branches will remain closed? For those that will remain open, you probably would require additional cleaning regime. So say moving from twice daily to 4 or 5 times daily. How do you ensure that these contracts and service level agreements are being updated and tweaked, ultimately to identify areas where we can save costs? We've mentioned earlier that there's a need to classify and provide your critical services for your critical services. To include statements to cover areas of including how you will integrate your sourcing processes, a possible and cost management strategy to them if they were not already aware of this. I think key also to mention here is that, again, your relationship with your critical suppliers, how you manage, how you maintain that relationship during this period will also be very key for success going forward. Also for your critical suppliers, seeing what we say is now beginning to request for their business continuity to understand whatever their crisis response strategy is. So what this enables you to do is that it enables you to plan proper, taking into consideration what your vendors or your suppliers are already planning for. So typically you would see that as part of your vendor or supplier onboarding processes, organizations would have requested their key critical suppliers and business continuity plan not into consideration the effect of COVID-19. So this is a good time to start asking for those plans and seeing what their response strategy is to take that now and incorporate into your own learning. Win-win situation that we see among financial institutions directing their spend on local businesses and SMEs, especially those that within their lending portfolio. So because of the global shortage, what can we buy for you? So today, these have also to your COVID-19 strategy for your supply chain, especially when you start with options for both spend items and the supply. It is key that we ensure that whatever is being communicated is clear, is concise, and definitely builds trust with your suppliers. building trust and stakeholder management is key to supporting operations during this period. Also, where possible, it is ideal to start considering that you need to establish additional lines of communication with your key business partners during this period. This will support you or help you with speeding up any escalation of business issues or procurement issues that you might have with them with them. So finally, it is key to enforce continuous supplier performance management processes. While other things might seem suppliers that are ready to support your business. So those are the key points we've seen organizations implement. And thank you very much for listening. I'll hand over to Biodo, who moderates the Q&A session.
Many thanks, Duni, for that wonderful session, especially on how financial services companies can manage cost efficiency and protect their supply chain in the light of the COVID-19 challenge or crisis that we're facing now. And I would also want to apologize for the breaks we have in transmission. I mean, again, like I mentioned earlier, these are some of the challenges with adapting to the new way of work, the dependencies, networks, and the likes of them. So we sincerely apologize about that. But we would also like to tell you, like I mentioned earlier, that the slides will be available and the recordings will be available on our website later on at the end of this webinar. And the relevant website or the location will be communicated to all participants, so we can actually make references to the slide and get better insight. So like Duni mentioned, we would move straight now to the Q&A session. We already have some questions in place, but we're still expecting more questions, and we'll still take more questions if they come in the course of the Q&A session. But I have a question here for Duni already. There's a question about the key considerations asset management organizations should. So what are some of those key considerations asset management organizations should look at with respect to operational efficiency in the face of COVID-19 challenge? So we've talked a lot about banks, insurance companies, but maybe specifically for asset management organizations, what should they be looking at?
Thanks, Biodu. A number of the points I actually mentioned cut across the financial services industry, but if you want me to be more specific in terms of asset managers, I will showcase some of the things that can be done. So for instance, you have products, savings products that your customers subscribe to. What are the workarounds that are being put in place such that from the comfort of their homes, not only can they initiate these transactions, the transactions get consummated? Because what I've found in terms of the digital footprint of some financial players is the front end appears digital, as in the look and feel for the customer, but the back end is manual. So what happens is the customer, maybe there's a savings product, or there's a product that maybe I can transfer funds every month and do certain things, invest and all that, investment products and all that. But there's still a back end that is manual that requires someone to carry out some steps, fill some forms, print some things, and ensure that the systems talk to each other. So I was having discussions with a client about a week ago, and what this pandemic has showed is the extent to which their digital strategy addresses customer needs. What they found was that they had fantastic products, digital products for savings, for investment, and the like. But the thing now was those transactions were being initiated by customers at the front end, but because there was nobody at the back end, the transactions were not being consummated. So what the staff now had to go to the office to ensure that these transactions were consummated. So a way around this, intelligent automation is a way by which we can address this in such a way that all those routine things that need to be done by your staff are moved to bots or bots. Then you now have the more complex things requiring decision taking are being handled by staff. And this can be done remotely in their homes.
Many thanks doing for that. I have another question for you quickly. So which of the highlighted considerations, I mean, you've talked about so many considerations that banks, insurance companies, and generally financial services companies should take note of. But which of those considerations should be prioritized by chief operating officers within the next 30 to 60 days to ensure operational efficiency levels are maintained or improved?
It's not either or in this case. Each of these are important for you to meet the expectations of your customers and keep the lights on. So for instance, ensuring that you communicate the new service levels, ensuring that the workarounds are clearly defined and communicated. So these are all things, it's not all situation. You need to have workarounds. You need to balance risk and controls. You need to have empathy and integrity. And you need to be sure that you're still meeting the customer's expectations and you have a situation where frustration is building up. So it's not either or. These are all initiatives that need to be to be delivered on within this timeline, really. So it's not as if there's something you can do now and wait for the long term. So there's a natural tendency for you to focus on the short term. But the thing now is the long term is where you differentiate yourself as a successful organization. And customers will remember you for what you did at this time to address the pressing needs they have. Thank you, Biodo.
Many thanks, Doyin, for that wonderful response. For Duni, I have a question from one of the participants, and it's more around, so in your view, what critical action point or next step should be taken by heads of procurement to manage costs? So, I mean, it's still similar in line with what I asked Doyin now, but what are some of those things that should be prioritized or that are critical in terms of next pointing for cost management?
Okay, thank you, Biodo, for that question. I think, first of all, in our view, that once that establishment say it optimization stream and define what you're managing to be. I think it's not what you're managing to be, like also just actually still manage to actually clearly define. Assigned to individuals across the region, like procurement, organizations have critical management. So whatever you take from it. So what you know, suggest is developing a plan. So what we can say a fit for crisis plan. And that plan should typically list initiatives or areas that will be addressed within 30 days, within 60 days, within 90 months. So for example, a 30-day plan will focus on initiatives that are quick wins. What can we quickly address within this month, even while saying so for example, when I think about, say, travel spend, a lot of organizations have started doing their travel policies, even with the planned impact of, say, of what the outlook post COVID-19 post once to resume to work, also resume back to work. For some organizations that have locations, they are clearly saying, so maybe they start having this meeting online now, leveraging whatever tools we've invested in. We necessarily do not even need to have a plan meeting where we all travel to a specific location. So we can actually revise that, get the required approval, and cut that down quickly. Let's plan and look at initiatives and say around non-performing branches and pushing a lot of processes to whatever digital channels as Zoe has recommended. So if digital channels are working properly and we're starting to see reduced traffic. Instead as they are being implemented. Thank you.
Many thanks, Dun. Many thanks for the response. I have another question here, and I mean, this could go to either Doi or Duni, or both of you can actually weigh in on this. So the question goes this way: it is likely that there will be employee redundancies as part of the cost management strategies to help organizations to survive the pandemic. How can business leaders manage this process in a way that it doesn't impact the quality of service?
Yes, there is a possibility, a high possibility that there will be redundancies. But the thing now is organizations need to be very deliberate in terms of how they go about this. So like I know I talked about workforce before. So maybe the skills are no longer required because maybe you have automated a process, or the process is even no longer relevant. It does not mean the individual, that employee, does not have a place in the organization again. It just means that as the skills and competencies of that individual still relevant in other areas of the organization. So it's important that we analyze where the individual skills will be more relevant, and if for whatever reason those skills are not relevant, are no longer relevant, I'm sure there are ways to manage the separation in that there is no bad blood, as in you prepare the individual for the separation and you ensure that the individual has sufficient buffer really to be able to forge ahead. But I'm sure my colleagues in the human capital competency will talk a lot more about this in the course of their presentation tomorrow morning.
Right. Many thanks, Dwayne. One final question for you. So, I mean, you've talked a lot about how providing continuous service to maybe those that are not, the customer groups that are not digitally inclined or included, such as the elderly, the rural dwellers, and the like. So, the question now is, what practical steps can be taken to ensure continuous service delivery to these specific customer groups in the wake of this pandemic, the whole lockdown, and streamlined maybe channels to this particular customer group?
I think the first thing you need to understand in this case is what is the nature of the customer's need. So once that is analyzed, you now need to step back as a financial services institution and decide how you will meet those needs. So for instance, you have the elderly, you have the disabled. So it's not really getting to the hearts and minds of these individuals, find out what their needs are, and find out maybe whatever their fears are, and seek to allay those fears. Then come up with products, services that meet those needs. So for instance, someone that doesn't want to use an ATM card can use the codes. The person can also use the biometric ATMs. If the individual has issues with respect to, I don't trust these cards or whatever. So it's really to understand what the needs of each of these groups are And using the data at your disposal, analyze what works for them, design processes working with risk assurance teams such that you address any risk to the organization, and make sure that the controls make business sense. Good.
Many thanks, Doni, for that. Doni, the final question for you here that we have so far is in terms of negotiation. So you mentioned earlier during your presentation that businesses or banks or financial services companies should also look to renegotiate existing contracts to manage cost. So how do we ensure a win-win outcome when renegotiating this contract with suppliers without compromising quality service delivery?
Okay, thank you, Bjorn, for that question. I think there are various aspects to negotiating with your vendors, and I think the first for you as an organization will be to define what your non-negotiable requirements are. Again, they should be aligned to your business strategy and your response strategy. If your position going to be what you need to take out of that negotiation. I think it's also critical to understand your vendors' concerns during the negotiation. You need to understand that vendors are also business people. So you need to proactively actually be on the lookout for opportunities that actually reach win-win outcomes. It should not just be a negotiation going for this is what my organization wants and this is what we are going to get out of it. We also need to proactively actually be on the lookout for these opportunities. And we also need to take into consideration the type of relationships we have established and built with our vendors. It is critical to understand that vendors or supplier management relationships should be built on the precedent that we are seeking to establish long-term relationships with mutual benefit for both parties. So it is essential that whatever relationships we've built over the years, we're able to leverage on them and then enter into negotiation with this. Because ultimately, when the vendors see that whatever request they have will benefit them in the long term, is the relationship and the relationship they are willing to continue to nurture. Convincing them and entering into the negotiations with them will ultimately be easier in that area.
Right. Many thanks, Doni, for that. And that brings us to the end of the Q&A session. We want to thank each and every one of you for sending in your comments and your questions. And we hope we've been able to address them satisfactorily. Again, if you'd like to further interact with us, you can reach out to us via your relevant PwC contact, and we would be very, very glad to interact with you. But before we conclude, I would also like to invite Dwayne once again to quickly present the results of the survey while registering for this session. So please, Dwayne, over to you.
Thanks again, Biadu. Good morning, all. My presentation will cover the highlights of the COVID-19 survey for Chief Operating Officers and Procurement Managers. The survey was completed in the course of your registration and completed by operations and procurement executives across various subsectors in the financial industry. I'll now go into the survey proper. An equal number of respondents estimate that the impact of the pandemic will last for 3 to 6 months and 6 to 12 months. While 24% of the survey respondents have reviewed that the impact will not exceed 3 months, 13% of executives are of the view that the impact will linger beyond a year. Now, similar of CFOs and risk assurance respondents presented yesterday, most respondents expressed concern about the negative impact of the pandemic on the organization's financial performance. About 31% of the respondents, however, were unable to define what impact the pandemic would have on the organizations, because in their view, they believe that it is difficult to foresee the impact of the pandemic at this point in time. Now, going on to the topical issues for operations and procurement executives. The number one issue for these executives is the likelihood of a global recession. This remains the number one issue for C-suite respondents to date. Other topical issues for the operations and procurement executives are reduced productivity. And we find that there's a tie between their view of market volatility and operational framework to meet the requirements of the new normal. So there's a tie between market volatility and their concerns in terms of the operational requirements to meet the requirements of the new normal. Next, I'll talk about the estimation in terms of how soon they can return to business as usual. Just as indicated by the risk and assurance executives in the course of our presentation of the report yesterday, 44% of COOs and heads of operations estimate a return to business as usual within 1 month, while about 31% estimate that post-pandemic recovery will be within 3 to 6 months. These projections of a speedy return to full operations, despite the global recession concerns, may be a function of how resilient their crisis management and recovery plans are, or their view in terms of how quickly we will come out of the global economic recession. Next, I'll talk about their investment plans and the impact of COVID-19. 42% of respondents have indicated that they would delay their investment decisions. About a quarter of respondents see opportunities for them to ramp up investment spend, while 23% of respondents will cut back on investment. At this point, I'll hand over to Biodun to close the session. Thank you for your time.
Many thanks, Doyin. So we have now come to the end of this morning's session, and we would really like to appreciate all the attendees and our panelists for making this an interactive and insightful session. So we would also like you to visit our COVID-19 content hub at www.pwc.com/ng/COVID-19. I think you can see that on our screens. So you'll be able to get more insight on COVID-19 there. And you can also download our Tax 247 mobile app on Google Play Store and Apple Play Store for additional COVID-19 resources. Please, we'd like you to enjoy the rest of your day and continue to keep safe. Cheers.